bounce back. This DeepSeek AI crashed it, bruh. It crashed the market. Like, Meta just did earnings today. I mean, this past week, and earnings came well too. Let's see. They beat. Estimate was 6.76 cents per share. Actual was $8 per share. That's crazy. They're just beating consistency on the board. In the last year, they did $134 billion in revenue in 2023, year over year. In 2024, they did $164 billion in total revenue. That's pretty good compared to 2021, 2022. 2021, 2022 were hard years. Obviously, the pandemic. What's good, fam? Welcome back to JRuss TV. If you're new to my channel, hit that like, that comment, that subscribe button. We cover all things business, finance, investing, reaction videos to different topics I find entertaining. If you're returning to my channel, you already know what's up, man. Welcome back. You feel me? Appreciate y'all supporting. We're going to keep running up. We're going to keep staying consistent, all that good stuff. But make sure you hit that like, that comment, that subscribe button. We just hit 1,000 subscribers like this week. I hit 1,000 subscribers this week. I appreciate y'all, man. I appreciate y'all. So we still gonna run it up. I'm at 1,008 right now. So that was a big goal for me, bro. I'm not gonna lie. 1,000 was big. It's taking me. I started YouTube 10 years ago. Well, it'll be a decade next year. Next August will be 10 years. So I'm 9 years in right now. It's periods where I was consistent. It's periods where I wasn't consistent at all. Now I'm back consistent, and I plan to stay consistent. So this is 9 years of on YouTube, and I finally hit 1,000 subscribers, bro. So all I can say is appreciate y'all for rocking with me. I'm glad y'all finding these videos entertaining. This is basically the stuff I do on a daily, weekly basis. So I'm like, why not record it, share some of my thoughts, my opinions. I've seen some success and some entertainment, so I entertain y'all, bro. At the end of the day, I'm trying to entertain the audience, my supporters. So that's cool, bruh. But I ain't gonna chop it up too much. But for today's video, what we gonna get into is one, I'm gonna go over the Robinhood portfolio update, of course. We're gonna go and look into that. Market was down because of this DeepSeek AI and all this hype and people nervous, people selling. You know what we do. All right, if you returning, you already know what we do. We know what we do. We buy more. But yeah, so we're gonna get into the Robinhood portfolio update, and then it was earnings week. A lot of big tech companies were doing earnings this week. So I'm gonna cover two. I'm gonna cover Meta and I'm gonna cover SoFi. As far as this week, that's kind of what two companies I wanted to look into. As of right now, I may cover more on the next stream or next video next week, whatever you have it. Then I want to get into DeepSeek AI. I want to tap in a little more into DeepSeek AI, see what they talking about. I did some research earlier this week, so I just want to watch a video, react to one of these videos, and then I saw a video Nike's coming back. So I just watched my past Nike video. They lost $28 billion in market share over the past year. So check that video out. Leave a comment, let me know what y'all think about that. So I'm gonna be following Nike a little bit. I'm not invested in Nike at the moment. It's tempting, but I haven't put the trigger on it. I don't know how I feel about it, but I want to cover it. I like Nike. I like their products. I'm a sneakerhead, stuff like that. So we're going to get into that. But let's go ahead and get into this Robinhood portfolio update, though. So to start off, on the day, we're down 1.5%. Market isn't closed just yet. It's 3:30 p.m. On the week, I'm down 7%. On the month, I'm down 4%, 4.6%. On the 3-month chart, I'm down 1.77%. Year to date, I'm down 4%. Year over year, I'm up 4%. I'm jolly down OC year over year over the past year. It's anything crazy. But I've been switching the portfolio up all the time. I'm up 6% right now. So portfolio did take a little dip back. Definitely because I've been restructuring the portfolio. Look at my last video so y'all can see that. I'm restructuring it though to prepare this for future growth. My strategy before really putting this on YouTube, like I said, I wasn't too active in this portfolio. I was more active in my private portfolio, really But I'm definitely gonna tap more than here and let y'all. We can grow this portfolio together. So I'm gonna make this a series. Like every week, it's gonna be dropping. But look at my last video to see some of the stocks that I sold, some of the stocks I've been investing in, things of that sort. Y'all gotta keep up. Y'all gotta keep up with me. I'm gonna do a little recap, but y'all gotta keep up with the videos. So tap in with the other videos. Let's see. Today's return, VOG down 4.4%. Apple down 1.37%. Nvidia down roughly 3.5%. Meta down 0.2%. Google up. Celsius down. QQ down. Rivian down. Microsoft up a little bit today. AMD down, I believe. Yeah, and then SoFi I'm down as well. Total return right now 24% up on VOG. 26% up on Apple. Nvidia up 29%. Meta 36%. Google 67%. Celsius I'm down 60%. QQ I'm up 32%. Rivian down 22%. Microsoft I'm down 2%. AMD I'm down 16%. And SoFi I am currently down 8%. So profile ain't looking too beautiful today. It ain't looking beautiful. But if you gotta stay down, we staying down though. We staying down. So yeah, that's a little overview of the profile. I did more last week. Buying power, I'm at 115. I'm gonna just cool out and wait. Yeah, so I think this week we just gonna keep it steady. We're gonna keep it moving. Ain't gonna do too much. I did buy. I bought a little bit. Did I buy some SoFi this week? I think I did. I think the only thing I did this past week was I think I copped a little bit more SoFi. Yeah, I bought another share of SoFi the 28th. So that was earlier this week at $16.13. I put $20 in at $16.13 because it went down. I bought a little high at before earnings about 18. That was a little high, but I'm long term, so it don't really matter to me. Then I bought some more at $16, so just averaged down a little bit. But that's the only thing I did. I don't really plan on buying anything today. Next week I'll see what the market do, but I'm really looking for a little bounce back. This DeepSeek AI crashed it, bruh. It crashed the market. Like, now things gotta recover. Palantir doing pretty good though, from what I've been seeing today. Palantir up. I have more Palantir in the private portfolio, not this one. It just hit an all-time high today at 85.22. It hit 85.22. That's pretty. That's good. Heavily invested in here. So that's dope. Meta just did earnings today. I mean, this past week, and earnings came well too. Let's see. They beat. Estimate was 6.76 cents per share. Actual was $8 per share. That's crazy. They're just beating consistently on the board. I'm not gonna lie. I like Meta a little bit more than one of my favorite Mag 7 company. That's why I'm gonna dive more into Meta and really start investing more money into Meta. And then I want to get into, I think Meta and Amazon really. I'm about to go ham with these two. Meta, Amazon. I mean, I already got shares, but I think for this account particularly, that's the next move. Earnings is February 6th, so that's sometime next week. But Amazon been doing good though too. For sure. Amazon has been doing magnificent. Year-over-year. Look at that, year-over-year, 50%. Meta. Probably Facebook year-over-year, 76%. That's amazing. But let's go ahead and dive into ain't nothing too much I can cover on the Robinhood. Like, you know what I mean? Ain't nothing crazy. I'm down week by week. You know what I mean? You gotta stay down long term for sure. Went over that. But let's go ahead and get into some of these earnings call though. First, I'm gonna start off with Meta. I'm going to start off with Meta. Now, many of you don't know, you might be new. Meta, formerly Facebook, they own a lot of different companies. Well, they bought a lot of different companies. They're big umbrella companies. So they own Facebook, they own Instagram, they make a bag off ads off ads. That's something that's their biggest revenue right now is the ads. What else? They got the Ray-Ban collab with all the glasses. They do that. They big on AI right now. So Meta is a very diverse company, and I like them, and they always innovating, and they always gonna be around for sure. They always gonna be around for sure. So let's look over the year over year balance. The balance sheet is the income statement. So let's look over the year over year income statement. I could do quarterly, but I just see just a big picture just to see what's up with them for real. From a wide a bird's eye point of view. So comparing to last year, I think I got it in here too. Yeah, so it's over here too. So comparing to last year, they did $134 billion in revenue in 2023, year over year. In 2024, they did $164 billion in total revenue. That's pretty good compared to 2021, 2022. 2021, 2022 were hard years. Obviously, the pandemic. They were going through a whole rebrand to Meta, and it's like the stock price in 2022 was at $115, bro. Like that's when I was buying a little bit, but for it to be $600-$700 all time highs right now from $100, that's a 7x your money. That's crazy, bro. That's crazy. That's 7x right there. In 2 years, Meta gonna be $1,000 stock in the next 2 years for sure. I can see them doing a stock split possibly. So we gonna keep investing in here and dollar cost averaging. But yeah, so year over year change, that's a 22% increase in 12 year over year as far as total revenue. 22%. Cost and expense, that's a 8% increase, which is cool. That's not too bad. Operating margin, gross profit, just be good. They've been putting a lot of money into research and development, R&D. So they've been definitely increasing over the years. 24 million, 35 million, 38. They really bumped it up this year over year from 38 to 43. That's a pretty cool increase. That's a pretty cool, good increase. Sales and general administration actually is down. That's good. It's down. They're reducing their expenses a little bit. That's pretty good. Reducing the sales, general administration expenses, increasing their research and development, which I'm pretty sure is going to AI. And then operating income 69 million, which is great. Increase from the last. Dang, all the boards are doing good. Let's see what else. So overall 62 billion in net income. 62 billion in net income. Okay, nice. Let's read some of this. Fourth quarter and full year. So daily active people, they have 3.35 billion on average for December 2024, which is an increase 5% year over year. That's good. Ad impression delivered across our family apps increased by 6% and 11% year over year. So ad impressions, okay, increase. Average price per ad is 14% by quarter and 10% year over year. So they're increasing. It's getting more costly to run ads, which is still good for the company as a whole because they're making more money off that. I've been getting more into ads lately. So that's not too good for me, but because it's going to cost me more. But at the same time, I'm investing in the stock, so it might balance out. As far as revenue, they had a 22% year-over-year revenue increase. That's good. Costs and expenses were 25 billion, or 95 billion year-over-year. So 8% year-over-year increase. Not too crazy. The fourth quarter cost and expenses invaluable due to increase in legal proceedings. Okay. The fourth quarter loss and expenses included a favorable impact 1.5 billion due to decreased and incurred losses for certain legal proceedings. That might have been like paying taxes and stuff. Capital expenditures, principal payments on finance leases. Okay, capital return, cash equity equivalents were 700 billion. Long-term debt was okay. We expect full year 2025 total expenses to be ranged between 114 and 119 billion. We expect the single largest driver expense 25 to be infrastructure costs driven by higher. We expect employee compensation to be the second largest factor as we add technical talent area and monetization, rally the labs, general order intelligence. So they're really trying to bump up their artificial intelligence for sure, which I'm going to get into next about the top companies that have been investing in AI this past year for 2024. So expenses are going up or be going up, but it's for infrastructure. They're reinvesting back into the business. They're reinvesting back into the business, and they're paying they're paying their employees a little more and or hiring more people to be able to make more revenue. Absent any changes to our tax landscape, we expect our full year tax rate to be 12 to 15%, which is cool. Okay, cool. No, that is great. That is great. I like Meta. I like what I'm seeing. They've hit on all the boards and they hit an all-time high. They hit an all-time high. I ain't about to get crazy deep into all this, fam. I'm just gonna cool a little, you know what I mean? Recap. But this week they hit an all-time high of $706 after earnings. So that's good. Meta's definitely on my list, and it's something that I definitely want to get more into. We're going to keep buying for sure. Now I said I wasn't going to sell nothing this week. Yeah, I'm just gonna hold for right now. Hold. Now, next, I wanted to just do a little, just see what companies were spending the most in AI this past year. How much money are these companies investing into AI? Because, like I said in my past videos, make sure I watch my past stock videos and everything. You got to see where the money is going. Who's the richest? Who's the richest, and where are they putting their money? You know what I mean? Who are the pioneers, and where are they putting their money at? That's what you gotta look at. So I want to see who's doing it. AI spending 2024. So Google, they put $120 billion into AI. They put $120 into AI. Appreciate you for joining in, fam. Make sure you hit that like button. We currently covering my Robinhood portfolio and earnings and stuff right now. So appreciate you joining in. Stay tuned. Leave a comment, like, all that good stuff. Subscribe. But Google, they put $120 billion in AI in 2024. That's a lot. Okay. Now Amazon, they put $60 billion into AI. They focused heavily on AWS, machine learning, Bedrock AI service. Okay. Now Microsoft, they put $95 billion into AI research and development. Definitely into their Copilot, which I've been seeing implemented a lot in the corporate world, 9 to 5 type vibe. And then with Meta, AI investment of $30 billion. Meta has channeled resources toward large language models and generative AI applications, powering content moderation and expansion. So okay. Microsoft is a front runner in AI monetization with revenue from Azure services. I think in their last earning, their Azure section actually went down. I'm not gonna lie, it was actually down. Microsoft also plans to acquire 1.8 million AI chips to enhance its data security. Dang! 1.8 million AI chips. Amazon is following closely with AWS multi-billion-dollar revenue. Company has committed $150 billion to expand its data center infrastructure over the next 15 years, with the further $80 million allocated to its AWS. Google invested $60 billion in AI development, particularly in training AI models. Models is $3 billion investment in expanding data centers highlights. Meta has aggressively scaled its AI infrastructure, purchasing 350,000 of NVIDIA's GPUs to power its AI ambitions. The company AI-related costs could reach $50 billion by the year's end. That's ridiculous. Now, how much is Nvidia's GPUs? I think it's the H100, if I'm not mistaken. I could be wrong, but I think that's one of them. They could have a new one, I think, which is like a black one, but $25,000 per GPU. 25,000. Okay, so and then Meta is buying Meta bought 350,000 GPUs. So they spent, what's that, 8 billion? What's that, 8 billion? I'm a C student, guys. My fault. I just want to make sure. I'm a C student, bro. Yeah, that's like 8 billion. That's almost like $9 billion, if I'm not mistaken. That'd be 1,000. That's a million. 750 million. Yeah, that's 8 billion, bro. Dang, that's a lot of money to be invested into AI. That's a lot of money to invest in Nvidia. You feel me? And that's crazy because this whole DeepSeek thing, and we're gonna get into that. But like, people scared, but it's like, look, I'm investing a lot of money into Nvidia and AI myself, so it could be risky by all means. But if the biggest companies, the Mag 7, if they're putting billions of dollars into this stuff, bro, like, I think we're good. They know something we don't. Don't be tripping out. Don't be tripping out. But next, welcome to the stream. If y'all new here, make sure you hit that like, that comment, subscribe button. We cover all things business, finance, investing, lifestyle, reaction videos to different topics I find entertaining in my niche. If you return to my channel, you already know what's up. Appreciate you. Hit that like, that comment, that subscribe button below. Next, we're gonna get into SoFi. SoFi is a stock I've been invested in lately. I started my position November-ish 2023. And I've been following them, and I'm tapped in with them. So I want to go over their recent earnings report. The stock dropped, which, I mean, I was cool. It did drop, but either way I was cool though, for real. And I'm still gonna be investing into the stock long term, one way or another. We're gonna keep dollar cost average, and if it go down, I'm gonna buy more. If it go up, I'm gonna keep buying. But let's look at the highlights. Adjusted revenue was up full year, 26% year over year. Let's get a round of applause for SoFi. EBITDA 26% adjusted, up, okay. Net income, GAAP income of 500 million, roughly 500 million. Record adjusted earnings per share of 0.15%. First full year of profitability. That's great. Okay. They had 10.1 members for the full year, which is a 30% year over year increase and 10x growth over the past 5 years. Damn. So if they can 10x again over the next 5 years, what's that? 100? My math right? 10 times 10? 100, right? Sometimes I'd be like second guessing myself, I'm not gonna lie. Yeah, so 10 times 10, that's 100. So they looking at in the next 5 years, 2025, that means 2030, I'll be 30 years old. They looking at 100 million members if they keep the same growth path. 100 million members, bro. That's a lot. Okay, and then as far as products, 14.7 million products, representing 32% year-over-year growth. 25 billion in member deposits year-over-year. Launched new robo-advisor platform. Launched 2 new credit cards, SoFi Everyday Cash Rewards on SoFi Essential. Expanded loan platform business. They executed. Executed 9.2 billion in capital market transactions, including 5.8 billion in wholesales. Galileo signed processing deal with Direct Express, the largest government card program for federal benefits. That's what we like to see. Galileo went live in the U.S. with a banking core implementation with SoFi CPS. Okay, let's look at this. This is good to look at real quick. Let's see. 2011 it was founded. 2015 they launched personal loan. 2018 Anthony Noda comes with the CEO launched SoFi Money. School loan. They hit 1 million members in 2020 and they're at 10 million. So that's a 10x in 5 years, bro. That's great. SoFi goes public. Bank charter 2023, 2024, 10 million members and counting, loan platform business expansion. That's good. Helping members achieve a comprehensive offering designed to meet all financial needs of our members. Digitally build brand awareness. What's this? One-stop shop for financial. Okay. Build brand awareness and trust lead customers into the financial. Tech DNA drives continuous product innovation. Fuel our top line growth. Is this their outlook? I don't know. Diversified business model. Designed to provide durable growth and capital lightweight. I will say that they are diversified. What's up with y'all, fam? If you watching here right now, appreciate you. Hit that like button. Leave a comment. Let me know your opinion. Which topic y'all looking for to me covering today. And yeah, appreciate the support for sure. Increased monetization as new products mature. Yep. Okay, let's look at some graphs now. This is members and products. Year-over-year growth. This is in the thousands. Members. Okay, so like we said, 2020 they was at roughly 1 million members. 2024 they're at 10 million members. That's a 34% year-over-year growth. That's great. As far as products, they've been increasing their products. 32% year-over-year product increase. 34 year-over-year product increase. That's great. Business diversification. What are they talking about? Ratio of financial services to lending products. Okay. Money services products year-over-year 50% up. Oh, so this is just money. I guess it is deposits. Relay 30% invest, credit card 14%. So money is really what's been growing year-over-year the most as far as lending products, financial services, money lending. I'm assuming. So their financial services are definitely the hot commodity versus their lending products. So their money services, their investment services, and credit card, personal loans isn't that crazy. Which I believe they were heavy on loans, but they've been transitioning because they had the student loan pausing and all that other stuff. But now since that's been unpaused and more people will be making student loans, that means that should see some increase in that. But year over year, still up 26%. Student loan 9%, home loan 21%. And as interest rates come down and all that stuff, we could see this increase as well. So that's good for them. Tech platform Galileo, year over year growth is 15%, which is cool. It was pretty high 2021, 2022, higher growth, but 15 is still good. 2023 was 11 and then went up to 15. So it's definitely different cycles, and it's different cycles for real for the company. Let's see, financial services and tech platform. Adjusted net revenue. 50%. Okay, that's cool. Financial services. It's just another. That's cool. I don't want to spend too much time on this. I'm already at 30 minutes in for real. SoFi lending platform capabilities. Come. That's cool. Let's just look at the financial review. That's what I'm gonna get to next. So adjusted net revenue year over year is 26%. Okay. That's cool. As far as adjusted EBITDA, up 20% year over year. That's great. Earnings per share, which is up 9%. So they're actually, and yeah, so this is their first year of net profitability. So that's great to see. That's great. They was in a negative as far as earnings per share. So that's amazing. That's amazing. Let's look at that performance versus guidance. Original guidance was revenue. They was around just a million, 2 million in net revenue. The 2.4. They actual was 2.6. So that's good. They beat that by almost 10%, the highest. EBITDA was original guidance about 25%. They went 26%. That's great. Net income guidance, I don't have a percentage, but that's cool too. Earnings per share 0 to 7 to 0.8 cent, and they came in at 15%. They definitely beat. Then they had a double beat, yes. And then tangible book value, great. Adjusted net revenue. Yeah, this is good stuff. This is good stuff. That's a lot of numbers. I ain't trying to bore y'all for real. But all in all, they had a great solid earnings report for SoFi, man. A great earnings report. And I'm excited to see what they keep doing in the future, and they keep excelling. SoFi and Meta, we covered these two, and yeah. I'll look at Meta balance sheet real quick. I don't want to get back and forth, but nah. They've been doing good, so that's great, and I'm excited to see what these companies continue to do. But what we're going today, the market's just closed. We're gonna get into this next video.